Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zach's Market Edge.
Welcome to Zach's Market Edge, the podcast about investing in your life. I'm your host, Tracey Ryniec, and I'm joined today by Kevin Cook, Zach's senior strategist and editor of The Tactical Trader and Follow the Money Trader. And he's here to talk again, the all interesting subject of the filings of the 13 Fs that happen every quarter. And just for those who aren't familiar with what this is, it's money managers who manage more than $100 million. They have to file every quarter within 45 days of the end of the last quarter, this form called Form 13F, and they have to put on there what they're doing with their filings, what they bought and what they sold. So this is an interesting insight into how a lot of big money managers and the hedge fund managers all think about what's going on out there. Of course, it's a little delayed because we get it 45 days later. So these filings are good through the end of 2015. So you kind of have to think, about what was happening in the fourth quarter to know why they were doing their moves, but still gives us a lot of really good insight about what they're thinking out there. So welcome, Kevin.
Hey, thanks for having me. I should tell everybody, we've got a lot of good topics today, a lot of good information, but we didn't work over the weekend.
No.
And as Tracey said, these 13 Fs are, the SEC requires them by law. They have to be in within 45 days of the end of the quarter. So what I saw last week was a lot of funds were getting their busy work done. The giants like a BlackRock or a Fidelity or a Vanguard, they have so many thousands of stocks positions to report on. They just start filing them as individual 13Gs, in the past 2 weeks. And then they produce the big list. Is probably today is the final day that it's due, where they have to list all their positions. And we didn't work yesterday since it was a holiday, so we're catching up. But we've got some good angles and some good stories of the thousands that are out there. This stuff is a lot of fun. One thing I will tell you about the SEC is the SEC does a good job. They have a great website collecting all this data, and you can go on there, sec.gov, and put in a ticker symbol and find out who recently made a filing on it. But what the SEC does not do is they don't tell you if the position that is stated is an increase or a decrease.
Yeah, it basically stinks.
Yeah, exactly.
It's worthless. Don't go there.
You could see that somebody owns 8 million shares of XYZ, but did they increase the position or is that a decrease?
Right, unless you've been tracking it yourself.
So Tracey and I try and do some of that dirty work for you.
Yeah, so I wanted to start with a couple of the big name guys because we hear these names. And I thought it was interesting what they were going into. So let's start with David Tepper because most people know him. He has been bearish. He was on CNBC kind of towards the end of last year, being real bearish, dark times coming, all that stuff.
Yeah, he would say, "Don't be too friggin' long."
Right, exactly. Yeah. He's at Appaloosa Management. Appaloosa Management.
Mm-hmm.
Got to get these names right. And he made a couple interesting new trades I saw. He started to go into energy, but not in the areas you might think. He seems to be playing it the safer route, which is the pipelines. He added into Energy Transfer Partners and Kinder Morgan, and apparently his stake in energy of the equities that he's in is now about 12% of his portfolio.
In energy?
Yeah.
Oh, okay.
So it seems like he's making somewhat of a statement of going in there. He also bought more Google.
Yeah, he did.
Google/Alphabet. I still can't call it Alphabet.
Yeah, no, I can't either.
No, it's so weird. But that's seems to be a popular. I saw a lot of the big names added, which isn't surprising because the bigger the fund you are, you have to put the money somewhere. And I saw a lot of the bigger tech names floating around out there as well.
Okay.
So.
And what did you say energy was as a percentage of his portfolio now?
Well, of the equity position, it's 12%.
Okay, gotcha. Yeah.
So it's not overwhelming, but it is in there.
Uh-huh.
And then following on the same themes,
what the theme of bottom fishing and energy and trying to catch the falling hand grenade?
Get in there, and kind of playing it safe. Seth Klarman at Baupost Group.
Mm-hmm. Classic value manager.
Yeah, and he's been big in energy for a while now, so this is nothing new. But I did think some of his moves were also interesting. He sold out of his exploration company, Pioneer Natural Resources. That's the ticker PXT. Sold that. And he still maintains his biggest position, though, is in Chenery, the LNG, which those are the pipelines and the terminal guys.
They're the terminals. They're the only company that has been approved to export natural gas whenever the government officially allows those gates to be open. And Chenery has all these long-term contracts with foreigners from China to the UK. So that's the bet on this business, is that they're going to have these locked-in contracts to deliver liquid natural gas. LNG, thus their stock symbol.
Okay, so that play really has nothing to do with what's going on with the crude market.
It does, but I won't pretend to be able to explain it.
Okay.
and if you think that a company like Chenery, symbol LNG, is immune to what's going on, you'd be wrong, because I'm just looking back at a 6-month chart. This stock was trading in the 50s, and it's been cut in half.
Wow.
Just like a lot of these.
So even though it's not an exploration crude company, it's still getting hammered.
And it also has some regulatory risk in terms of what the federal government will allow them to do in terms of exporting liquid natural gas.
Right. So that's his biggest position.
They're building that big port down in Louisiana somewhere, where they're going to have this exporting terminal. So the liquefied natural gas will be delivered there or produced close by, and then they'll be able to put it on these big tankers and send it to China or wherever.
Okay. That's a big stake there.
Yeah. So and I've read about Seth and that position in particular. He's very committed to it. So even though he doesn't care as a value investor, he's like, we just buy more on the way down.
Right. It looks juicier.
Yeah.
He now has about 34% in energy, so he's much more heavily weighted.
He's really been trying to pick the bottom.
Yeah. I do find it interesting. A lot of these value guys are definitely heading into the energy sector. And one of the bigger funds, Jana Partners, they have a lot of different positions, but I also noticed that for the first time, they added several of the exploration companies. It's not a huge position for them, but they added Whiting and Oasis Petroleum. Whiting's ticker is WLL, and Oasis is OAS. And these are the more dangerous plays, I like to say, because
you've owned Whiting.
I have, and they are the pure, explore and produce, and that is just getting killed right now. Right. And looking at those charts, this is, he was adding into this in the fourth quarter, obviously, and it hasn't been pretty in 2016 for either one of these.
Yeah, this is Barry Rosenstein, I believe. Pretty smart investor. Not, he tends to concentrate not a ton of positions. I'm seeing his fund may have lost some money from Q3 to Q4. Looks like he might have had a prior market value of $8.9 billion, and he's down to $7 billion. But yeah, I see the building positions in energy.
Yeah.
What you said he was buying Whiting and Oasis?
And Oasis.
Okay.
These are the smaller positions.
Yeah, I see that. They don't really show up that big, so he's not making a big stab into energy.
But he's kind of dipping his toe in, thinking these look kind of juicy. And they did at the time. At the end of December, Whiting was trading just over $9 a share. That was a new low for it, and that looked kind of enticing. And then, now it's in the 4s.
Oh, yeah. So Whiting has been cut in half.
Half, yeah.
And you say $9 at the end of Q4.
Yeah.
But he probably wasn't buying.
No, not on that list.
Right. So if we look at the beginning of Q4 in October, Whiting was trading 22.
Wow.
So if his average is somewhere in the teens, he's lost 75%. Or 65% on that position.
Right. But what can an average investor learn from that?
Well, I think when you see smart investors like this, making a bet here, one, it says they're probably fairly confident this company is not going out of business,
right? Not
going bankrupt, and that's
a big deal.
That's one of the risks here.
Yes, that is.
If you're keeping up with the oil story at all, you hear a lot of conflicting things, about. Do we have a bottom in oil now? Will the Saudis agree to cut production with other OPEC members? But the people in the know really say, no, this is not done. That oil has not bottomed, especially now that the refiners are in their spring phase here of, whatever they do to prepare for the summer, they have to modify
Yeah, there's some shutdowns.
Yeah, there's shutdowns.
Yeah.
And so the refiners aren't buying a ton of crude right now for the next month. Then you have Iran coming on with all the supply.
Right.
I don't know if there was anything conclusive with any OPEC agreements, yesterday.
Who knows?
But the experts that I read in the industry say that we're in a position here where supply continues to build. The inventories will build. So what does that mean for price? Price has to go down until what? Until some of these companies go out of business. Because right now they're just pumping all they can to pay the bills and pay the debt. And if if reality forces them to cut their own production, is it because they went bankrupt or whatever? And that's some people think that's the only thing that'll put a bottom in the oil market is that much more pain. So I think you can look at some of these smart investors buying a Whiting, at we say he may have paid $15 and now it's trading $4.50.
So if you were an investor and you're thinking, well, now it's at $4.50. So if you're not in it at all yet, it might not look like a bad deal right here.
There's got to be some values here.
Yeah.
But you have to have a long-term perspective. You're not if you think you're going to trade this on an oil bounce back to $40 in the next 6 months, then you're gambling. But if you look at it like if you understand the company and you feel the company has some long-term value, then maybe it's a 3 to 5 year play.
Yeah. I think investors really need to look with the EMPs at what kind of assets are on hand. How well can these companies weather the storm? What is their debt level like? And all of those key things, because each one is not created equal.
The chart of Oasis almost looks like Whiting.
The same.
Yeah, trading $4.50, but it was $12-13 at the beginning of Q4 when he may have been buying, and then ends December at $7. But definitely these guys are underwater there.
Just on a side note, I noticed that he seems to be dipping a toe into some of the pharma too. It looked like he added a position in Valiant that he hadn't had before.
This is Jana?
Yeah.
Okay.
And he also added into Pfizer, which I feel was in the fourth quarter, especially kind of a deal. That was a bargain, and he is value oriented. So
I see the Pfizer ad is pretty chunky. Valiant doesn't really show up as a top buy, but Pfizer's in the top 5 buys.
Yeah.
With a 4% increase. Pharma went on sale and may continue to do so during this election year, where you've got politicians talking about price gouging.
Right. Yeah, people still don't really want to go into that area, even with the big pharma like Pfizer, which doesn't, it's not as guilty, I guess you might want to say, or it's not as caught up in as some of the rest of the group is.
Right,
but it's being thrown in.
They're always caught in the position of their patent cliffs, and when something goes off patent, where are they going to get the next blockbuster drug from? Who are they going to buy to get that? And then will they be able to charge the types of prices that they have been in the past?
Yeah, it looked like in the tech world, he sold a big chunk of Qualcomm. He still owns some of it, but maybe he was freeing up some money there. And
I see that.
He added Microsoft, I think.
Yep.
So
actually, no, Microsoft was a reduce.
Oh, it was a reduce.
Yeah.
Okay, I missed that.
You know what he did?
So maybe he's just getting out of tech.
You know what he did? He sold the stock and bought calls.
Oh, okay, maybe that's what I saw.
Yeah, this is still Jana Partners we're talking about.
Yeah. Okay, it is interesting to see where these guys are all going in.
Yeah, and so he's took off a big chunk of Qualcomm, but still owns some. And the chips have just gotten smashed. Some have done okay. Last time we talked about Avago, it's hanging in there, but others, it's the global concern about China.
Yeah. If
there's a global economic top, so to speak, then there will certainly be a semiconductor top in place.
Right, definitely. Yeah,
we won't even get into if we're in a bear market debate, because that's a whole other show.
That's right. We'll do another one of those later. So what else is happening outside of the energy then? Because the energy just caught my eye because a lot of these guys were going into it. The ones that I was able to look at, like as you said, thousands of these forms are being filed. So we're just picking and choosing what we deem to be interesting,
right? And
names we know, but. You brought up another fund that appears to be going in a little bit different direction. The Ricky Sandler over at Eminence Capital.
Yeah, Eminence is a fund that I followed for a while. I followed them in restoration hardware when they bought a couple of years ago, and it turned out to be a good move for the short term. Now that stock is falling out of bed.
But I don't think they're in that one anymore.
Not anymore. No, they don't own Restoration anymore.
Wonder if they'll get into that.
But what I found interesting about them at the time was their consumer focus. They had a large percentage of their funds in lots of different stocks in consumer areas. And right now, just to tell you what they did for Q4, they increased their position in Keurig, Green Mountain. We still call it Green Mountain because it's got that symbol.
I do too.
Yeah. But Keurig, it is
GMCR.
The official name is Keurig Green Mountain.
Yeah.
And then some hotels, Starwood and La Quinta. So they increased some positions there. And
I noticed he was in TripAdvisor too. Like he definitely likes those kind of, not just the hotels, but the travel names in general, which obviously is consumer.
And I'm just going to run down a list of raised stakes for Q4. Asbury Automotive, consumer play. Carnival, Diageo, Group 1 Automotive. You're trying to get it on all the
a lot of the auto
there.
guys.
Car Auction Services, Lionsgate Entertainment, Men's Warehouse, Pandora, Sonic Automotive.
Wow. Does he own Lithia? Doesn't sound like it. Is that the only one he doesn't own?
Yeah, exactly.
Penske and Lithia.
Even Zynga. Oh my gosh, he must be really underwater on Zynga because they had 73 million shares and now they have 76 million shares.
Wow. But even on a lot of those, again, this is for Q4.
Right.
I know the auto retailers have just taken it on the chin.
I mean, what sector hasn't?
Right,
Except
right.
Utilities and staples, right?
Right.
And speaking of staples, I want to point out that Eminence Capital, I said they have this big focus on the consumer. What I look back at what their positions were in early 2015. So at the end of Q1 of 2015, they only had a 5% allocation to staples. Maybe Procter & Gamble. I see they reduced a stake in Smucker's, basic food and clothing kind of things. And
so this is a year ago.
Yeah. And a 34% allocation to consumer discretionary items.
Wow, that's pretty big.
Yeah. The shift into Q4, now at the end of what we see now as Q4 has ended, is that they are 17% in staples and only 21% in discretionary. So you can see this shift like it's, looking at the end of the economic cycle.
They're getting more conservative.
Yeah, moving to staples, away from discretionary, just in case there's a recession.
Right, because those are the areas you would pull back on. You're not going to go buy the car or the clothes or some of this stuff.
Although they added to all their car positions.
I know. So what does that say?
Well, that's the consumer does remain strong in autos, they say, right to the end of the cycle.
Okay.
It's
that's the last thing to go.
Yeah, top of the cycle
We'll still buy our cars.
Exactly. With interest rates so cheap because maybe they're getting more incentives. Get it now before rates go up.
Right, that's true. They will be piling in. I'll be interested to see the auto numbers, actually, the next couple months. That's an interesting sector. Okay, so, these are just a few areas that we're able to cover because, as we said, there's thousands of these that are filed. But I did think it was interesting to see the energy positions and some of this, what's happening with the discretionary buying and where these big guys are going in, because I do think it gives some lessons for those of us without millions of dollars at our disposal. And I also feel like this is kind of showing how hard it is to time the bottom, especially in the commodities. But energy, I know I've timed it a couple times, just even in the value investor that I run here at Zacks. I tried to get into the big integrateds. I noticed so far none of them are buying the Exxons or the BPs. I tried to go that route and I got squashed down badly last year. And so, I know a lot of people are debating, is this the time? Should I still be scared? But these guys are getting in. Clearly they were too early. Yeah.
I mean, the benefit of tracking positions of large investors and seeing what they're doing is you get to follow somebody who does really deep homework. Right. They've got a research staff and they're really taking a close look at this stuff, even though it's not personally their money. Their reputations are on the line. So they don't want to lose money. But
we're all talking about them.
So you can follow, you can let them do the homework, so to speak, but they also have deep pockets.
Right.
Which means they're in this for a 2, 3, 4, 5 year horizon.
They don't get scared out as easily.
And they'll take a 30% drawdown or a 50% drawdown.
Yeah. And then they'll just, if they have extra cash, add to their positions in there. But that's something that, the average investor can learn from too. Okay, so will you be back next quarter to discuss some
Absolutely,
more? Because
yeah.
this is always interesting
Always
to me.
fun.
I think it's neat. Okay, so if you want to know more about what Kevin is thinking about the stock market and anything else, his ideas, you can also find all of his articles on Zacks.com. You can find my articles and videos there as well. And if you want to listen to any of our other podcasts, we did a 13F podcast on Valiant a couple months ago that was really interesting about, who was buying and selling into that. You can check that out. And we also did a really good double podcast that was like the big whammy one on what was going on in the stock market and where we think the lows might be and what some of the big managers were, one of their calls were on where the bottoms might be. And even though that's a couple weeks ago, we did that one. It's still worth listening to both of those. There's 2 podcasts there you might want to check out. One was how low will the S&P 500 go? And I forget the other one was maybe what you should be buying now or something like that.
Yeah, I forgot too.
Yeah. But
I think we were more focused on how low the stock market is going to go.
I know. Yeah, that's the interesting one because we're still in the midst of it right now,
Right.
even as we're talking a couple weeks later.
I think we go below 1,800 in the next couple of months, but we've got a bit of a bounce on our hands right now, and I think that big funds will be looking to sell into it.
Yeah, so definitely check out all our podcasts. They're on SoundCloud.com. You can also check them out on Zacks.com, of course, and on iTunes. So for Tracey Ryniec, this is all for this week.